Today's highly contentious U.S. presidential election has poised the market on a knife's edge, with major consequences looming for financial stability worldwide. Gold prices, sitting comfortably near $2,745 an ounce, reflect a nervous anticipation, while the dollar index rises in response to a tight race that could sway the balance of global markets. As the contest between Democrat Kamala Harris and Republican Donald Trump inches toward its heart-stopping conclusion, investors are hedging their bets, seeking the relative safety of precious metals. Ladies and gentlemen, welcome back to the show, where we break down complex economic matters in simple, digestible terms. What we see now in the financial arena isn't just about a choice between two political figures, it's about the economic policies they represent and, more importantly, the risks and responses those policies could trigger. Uncertainty abounds, and both Wall Street and Main Street are feeling it. Today, we'll dive into gold prices, central bank actions, the intricate dance between inflation and interest rates, government spending, and how it all boils down to potential long-term damage to the global economy. To understand why gold is hovering around $2,745, let's first consider the long-standing relationship between political uncertainty and precious metals. Gold, often considered a haven during times of economic turmoil or political instability, acts like a fallback plan for investors. Gold doesn't just rise for no reason, it's an asset class that appreciates when traditional financial instruments like stocks and bonds are perceived as riskier investments. Amid political tensions, especially when election outcomes are unclear, as we've seen with perhaps one of the most uncertain U.S. elections in recent history, investors naturally flock to gold. There are deep-rooted reasons behind this behavior. 1. Inflation hedge. In times of economic uncertainty, government stimulus packages and expansionary fiscal policies can push borrowing and ultimately trigger inflation. Gold is a proven inflation hedge. It retains its value when currency begins to deteriorate. 2. Currency devaluation. As we witness fluctuations in the US dollar, other countries are leveraging their dollar-based portfolios to buy gold. The Bloomberg Dollar Spot Index rose 0.8%, reflecting this volatility. However, despite this global trend of gold hoarding, there's another dimension that links directly to the political outcomes of this specific election. Under Trump, there has been an overarching theme of trade tariffs and nationalist economic policy. Trump, energetically pushing his America First initiative, saw gains in sectors tied to manufacturing, energy, and traditional industries. His tenure, much like his campaign, thrives on aggressive trade policies, notably targeting China. Tariffs, retaliations, and uncertainty have driven investors to nervousness, but there's more to it. 1. Debt to GDP ratio skyrocketing. While Trump's policies appear to stimulate job growth, innovation, and investment, they exacerbate the world's concerns about the gargantuan U.S. federal debt, now well above 129% of GDP, CBO estimate, 2024. This massive debt load naturally brings fears of inflation, making hedging strategies like gold investments all the more important. 2. The tariff debacle. Trump's bold tariffs on China created massive uncertainties in global supply chains. Should he win, tariffs are likely to escalate even further. This unpredictability will drive companies, already distressed from fragile pandemic recoveries, into further protectionist measures and, naturally, seeking shelter in commodities like gold. Additionally, continued splurging from Congress on stimulus packages will weaken the dollar, raising the specter of inflation, another driver for gold demand. Harris represents a stark contrast, with her economic principles rooted in progressive ideologies. Expected to focus heavily on sustainability, tech taxation, and middle-class welfare, she might shatter certain existing economic mechanisms. 1. Weakened growth. Deutsche Bank analyst Michael Su suggested that a Harris victory could trigger an initial sell-off in gold. The reason being, markets anticipate weaker economic and industrial growth under her governance, particularly with tight regulation and green energy transitions expected to hurt Wall Street more than Main Street. 2. Lower dollar index. Harris's softer regulatory stance toward China, countering her tough on tech taxation policies, could see a dip in the dollar, sparking a complementary rise in demand for gold, especially in gold-hungry markets like China and India. These two countries combined account for nearly 40% of global gold consumption. To grasp the full implications of today's tense situation, we need to zoom out and view these dynamics in a global context. Leadership in the United States has a direct bearing not just on international trade but on broader economic stability. The national debt, already exceeding $33 trillion, is on every investor's mind. The Congressional Budget Office projects U.S. debt will surpass 138% of GDP by 2041 if current spending continues unchecked. The sheer enormity of this debt means that the U.S. Treasury will eventually face a harsher reality. More borrowing will drive interest rates higher, leading to ballooning interest payments, already projected at 2% of GDP by 2028. No matter who wins, Trump or Harris, this enormous debt level will have massive implications for the economy. 1. Interest rates, even slight upticks in interest rates could send tremors through the economy. Just look at what the Fed has done in recent months, aggressively cutting rates to help businesses ride out the storm of a sluggish recovery, but how long can this last? Since the beginning of 2020, the U.S. has had a long stretch of low interest rates while the GDP growth rate averaged around 2.4%. 2. Ballooning inflation, excessive government spending without proportionate output is the fast track to inflation. Post-pandemic fiscal stimulus packages alone, coupled with supply chain headaches across the world, have already sent inflation to 5.4% as of October 2024, and that's a conservative projection. And if the country continues on this path of rampant spending and borrowing, we could well be looking at stagflation. It's not just the Americans grappling with inflation, we're seeing alarming trends globally. The Consumer Price Index, CPI, has soared to 8.5% in the Eurozone as major economies like Germany and France feel the heavy weight of energy costs post-pandemic. We're heading back 50 years, to a time when cash wasn't safe, growth was sluggish, and inflation was punishing everyone. Let's return to the star of today's economic drama, gold. Investment in gold should serve as a cautionary indicator for everyone. Here's why it matters now more than ever. 1. Central banks are stockpiling too, showing a lack of faith in fiat currencies and even their own fiscal strategies. Central banks from nations as diverse as China, Turkey, and India have increased their gold reserves in 2024 by 10% compared to 2023, according to the latest World Gold Council reports. Advanced economies like Germany and France aren't far behind. 2. Shrugging off traditional limits, signals of the gold rally surpassing $2,745. Growing risks driven by the Fed's continuous rate cuts paired with high anxiety in every corner of global markets have already been factored in. Investments in bullion by institutional investors, sovereign funds, and households reflect underlying fears about a broader financial system breakdown, a theme that unites the Trump-Harris political dilemma. If investors, even massive sovereign wealth institutions, are diving into gold, it suggests they don't trust the future stability of their economies. Our global economy seems predestined to face more significant hurdles, regardless of the U.S. election results. An economic collapse isn't desirable but feels inevitable as weak leadership, skyrocketing debt loads, spiraling inflation, and an over-reliance on monetary tools dig deeper into the world's economic foundations. Here's the uncomfortable truth: the alarm bells have been ringing, and everyone, from the average middle-class family to the wealthiest institutional investors, are looking for safe havens. Gold might tell the story, but the real issue stems from how governments handle runaway debt, inflation, unsustainable fiscal policies, and traditional industries' inability to transition as swiftly as needed. This was today's breakdown of the pressing economic issues looming over global markets. No matter the political outcome, we can be certain of one thing: the consequences for investors worldwide will be long-lasting. If Trump wins, expect even more government splurging and debt creation, and if Harris takes over, brace for slowed growth and complicated regulatory challenges. Either way, gold, and other precious metals, are pointing to something much bigger than just short-term market fluctuations. Stay tuned for more as we'll undoubtedly witness these issues materialize in real time in the coming weeks, reshaping not only financial markets but the global economic system itself.